Thank you for inviting me for today's session. It's the inaugural session of the ET Edge Insights webinar session. And today's topic is really important because what we're talking about is how are we shaping the 2030 business landscape, which is the convergence of economics and geopolitics. It's really critical when we're looking at the situation. And there we have a great panel here today, esteemed leaders across diverse backgrounds, international relationships, regulatory, legal, technology. We have a lot of leaders here today in today's panel. I'm really honored to be chairing this session and moderating it today. Uh, I'll just set up a context overall. What we understand here is geopolitics here is being driven across five major big things which we are looking at across. One is obviously the geopolitical wars, which we are looking at Russia, Ukraine, in there. Second, Israel, Hamas, the entire geopolitical crisis which is happening of because of this wars, and the entire supply chain which is getting affected. Second is obviously the entire trade war on the tariff, where the tariffs are being changed. The countries have to rebalance the entire supply chain, looking at the tariff war which is happening there. Third important aspect, if I look at it, and there's a lot of discussion on China plus one. How do we take the China plus one as an important aspect of it? How is the manufacturing changing as we go ahead? We've seen Mexico, we've seen Colombia coming in, and there India is coming up in a big way there. Fourth is, I know it's been a change which has happened after pandemic, the entire supply chain because of the COVID. We've seen a lot of changes happening in the after that, how the entire service delivery, how the entire interborder crop of the goods travel, everything because of the COVID has seen a change. Finally, I would talk about the technology getting in. The AI is changing everything. AI is changing the service delivery, the way we are working, and I would say three major changes happens in the technology which has happened. Mobile, internet, now AI is going to change the way we are working. Now, with this entire thing, with the entire changes, all these events are happening. What are we looking at? What's happening in the market right? If I see a geopolitical realignment which is happening where the era of a globalization, US-led globalization, which was there, marked by open markets, free trade, and geopolitical stability, we are going into a greater power competition here as we go ahead. Economic nationalism and rising conflicts, as we see. There are shifting of the overall superpower, which was there post the Cold War, which we've seen, is actually changing into a multipolar world as we look at it. We've seen policies around which are being protectionist for the country, like onshoring, friendshoring, industrial policy, and the governments are looking at how to secure the supply chains as we go ahead and supporting the strategic industries. With this entire overall changes which are happening, we are looking at the political superpower fighting on the overall economic trade. Second part here is the Gulf states are reinventing itself. And we are also looking at Africa with a growing population and ambitious population coming in with a lot of opportunities. India, Africa, we are having a lot of opportunities there. Keeping all this in mind as we are going ahead, at the trade, there is a rebalancing which is happening. The supply chain, we need to see how companies need to navigate this overall trade rebalance as we are going ahead and doing it. There are alliances coming in as we are seeing in BRICS. Plus, we will discuss it about today. Quad, G20, Global South, many alliances are being formed here to navigate this overall all trade and balancing this economic growth. This is where we are looking at it. And as I've said it, technology is playing a critical role in changing many of the aspect of it. AI, if you say quantum computing, biotechnology, space is actually changing in how we are delivering services. The climate and resources, if I may touch upon 2030 sustainable development goals, we need to achieve it. Questions will be asked, have we achieved the sustainable development goals by 2030? There are questions on where do we go if where we are and what do we want to do beyond 2030 when we have defined our SDGs there. The race also is going to shift. obviously towards, if you look at it, resources, and there is a race towards lithium, mineral resources, rare earth materials, rather than the war which was happening on the oil war. So if you look at it, that thing, the resources and everything, the climate change is also changing. So multiple things are happening across, we are going ahead. And in the entire scenario, what we are looking at is also the society and the population is also getting affected because the urbanization is happening rapid. There is a pressure on infrastructure. There is a pressure on the people of delivering. The companies needs to create a social impact and also give services with the urban population. Keeping all of this in mind is a situation where we need to say, what do the companies need to do going forward? Closure to India, if I look at it, how India is positioned right now, we by 2030, India will be the third largest economy, as it is predicted. Uh, India has the largest digital public infrastructure, Aadhaar, UPI, ONDC, which is growing rapidly. And this is the biggest digital network, not only within India, it will be used outside India. That's where the digital trade is going to be there. India will have the largest, over 200 million middle class population, which is the largest consumer market if we look at. So finally, with this positioning of India, with the global situation, today we are here to discuss what are the challenges the companies are facing, how they do to navigate, what are the scenario, where are we looking at. There is a lot of thought going in that the companies need to start focusing on just in time or just in case. uh, there are disruption in supply chains which are happening. There is obviously border closures or policy changes, keeping the climate change in mind. So multiple things are happening, and in where we are, uh, every business needs to rethink what is the global strategy they need to do, and the investors and executives also need to align. How do they keep the geopolitics in mind while making the decision? Because now it is not a noise; it's a reality, right? With this, I'll just stop here to setting up the context where we are. I would like to go to our first panelist, His Excellency Mr. Philip Green. So we're honored to have you here today. My question would be to you is, in this overall fragmented global work order, which we are looking at it right now, what strategies are effective in strengthening the bilateral trade and investment flows between India and Australia?
Well, thanks very much, Charles. It's great to be with you and super to be working with Economic Times again. And I must say, I think you set out the context very thoroughly and thoughtfully there. I have to say, as you were speaking, it struck me that many of those things you were talking about are not affecting the bilateral relationship, the economic bilateral relationship between Australia and India. And in fact, what our bilateral economic relationship is characterized by is two positive effects. Firstly, we have a high level of economic complementarity. Australia is strong in the sorts of services and goods that India will need for the next phase of its economic growth, whether that's energy or resources, including critical minerals that you mentioned, or indeed skills and training. And those complementarities are driving our economic relationship. But the second thing is that, for the first time in our political and strategic history, Australia and India are strategically aligned. So many of the concerns that you rightly sketched are things that from which Australia may in fact be a beneficiary. And so it's not surprising, given that economic complementarity and strategic alignment, that our bilateral economic trends are very good. So just one statistic of many, over the past 5 years, India's exports to the world have grown by 40%. That sounds pretty good. But over the last 5 years, India's exports to Australia have grown by 200%. So India is benefiting fivefold more from opportunities in the Australian economy than it is with the rest of the world. So, but just to come to your point, there are things that governments need to do, even in times where we have wind in our sails in our economic relationship. And the first thing is that we are trying to drive down tariffs and other costs to business. And that's why we've concluded the first phase of our free trade agreement, which is called ECTA. And that's why Ministers Goyal and Farrell are trying hard now to settle the second phase. Second thing that we are doing on the Australian side is that our Prime Minister, no less, launched an economic roadmap for engagement with India this year. He didn't do an economic roadmap with Japan or with the EU or with the United States or other major trading partners. We're very focused on what is happening here and trying to make the best of a very strong relationship that we've had. But one final thing that I want to mention, and this is perhaps unique to Australia, but we are now seeing real benefit accruing from the fact that there are now 1 million people of Indian origin who are in Australia, many of whom are in senior positions of business, many whom are entrepreneurs themselves. And what we are trying to do through a number of initiatives is to unleash that power of people who know about India's business practices, who know language, who know your country and can make the most of it. So look, we can talk a little bit later about some of the other things that we can do, but my fundamental points are we're in a very good spot for Australia-India economic relations, and reducing trade barriers and identifying what we can do through our economic roadmap and potentiating our diaspora, your diaspora rather, are three of the key things that we're doing.
So thank you. And it's really encouraging to hear that how India and Australia are actually working together in some of these initiatives, taking it forward. Uh, I will go to the next panelist. If I can ask Mr. Ashish Agarwal, if you look at it from the Indian company side, how are they recalibrating the strategies to navigate this evolving policy and regulatory landscape, and among the overall shifting of this overall global economic currents?
Well, thank you, Nilachal, for that. Your question is sort of multifaceted in the sense that when you say evolving policy, there are times when we need to see the policy evolve first. So when there are constraints on the policy evolving and then suddenly de-evolving or moving in another direction, it becomes a little tricky for companies like us to take a final strategy position in terms of how do we go about the changing landscape. So to put it simply, we put our prints on the sands of time, and then the next wave sort of takes them away. So that stymies us a little bit in terms of finalizing policy. But at the same time, having said that, there are some very strong watching points that we are looking at as a company, as a global company, in which the possibility of having multiple sources of sourcing equipment has become a necessity. We cannot be dependent on single source suppliers anymore. We have to have multiple suppliers for various products that we use. We are also observing a slight change in the global order, and the Australian ambassador just spoke about it a minute back. That bilateralism is picking up from where we see it with respect to trade and other issues, and multilateralism seems to be taking a little bit of a backseat. Now, again, having said that, I say it with a pinch of salt that it's still evolving. It's not done yet. We're talking BRICS, we are talking Quad, we are talking EU FTAs, we are talking, different country FTAs. But where will it stop? Where will it end? How does one find stability in terms of the very, very quick changing, shifting positions is where I think companies like ours have to wait and watch and evaluate for a while.
Yeah, absolutely. And I think important point, multi-sourcing and bilateral is picking up. And I would take up some of these points and say, how do we, this is the trend which we are looking at going forward. Yeah, I'll come back to you again. Before that, I'll go to next panelist, CP Gurnani ji. If I can just ask you, as the global trades patterns are evolving, and you can look at how Indian businesses is also getting into the digital transformation. Can we look at how the automation, what Indian companies need to do towards this digital transformation? How the automation to sustain the overall competitiveness in the market? So I think we just lost CP Gurnani ji. I think he's back. Okay, let me just move on and I'll come back to him for with a question. Uh, as we move ahead in this overall scenario, I ask you overall, Mr. Rudra Pandey, from the legal perspective, is how do you think, from a legal standpoint, how the Indian corporates are actually navigating this complex trade, investment, regulatory frameworks as we approach the 2030?
Thank you, Nilachal. Thank you, ET Insights, for having me. Let me, before regulatory regime and how the corporates are tackling, I think it is important where we are in terms of, I think we already touched upon some of the points, but what is important for the Indian corporates as of now, and they are actually leveraging the situation. It is a situation where there is a need for diversification as the trade barriers are there, and also as we talking about India to be part of the global supply chain. So it is a time when India is going global. India is taking the benefit of the situation, current situation. They are acquiring assets, and why they are able to acquire the assets? Because they are profitable. Their leveraging ratio, Indian companies, corporate leveraging ratio is quite low. So it is a right time when Indian companies are able to achieve what they have to achieve. At the same time, they're also able to get the technology that they want to be part of the global supply chain. So just to give you a number that while in the context of overall FDI last year, we received about 70 billion dollars. India also invested close to 25 billion dollar plus last year. And largely, these investments are happening in, of course, fintech, manufacturing, several other sectors. And Singapore is the sort of holding company, but they are not limiting their investments only to Singapore and Mauritius on the for the tax benefit or being the holding structure. They are going to Germany, they are going to Spain, they are going to Italy, they are going to Japan. So what is now I'll give you the regulatory framework that the entire ecosystem in India in the context of regulatory framework is helping the Indian companies to go global. If you look at the government of India has been very mindful and ODI regulation, which is called Overseas Direct Investment Regulation, has been liberalized, which is helping Indian companies to go global to acquire assets. At the same time, the FTA, which is is in place or underway, which is Australia is one of them. His Excellency is already here, and that is showing a good result. Honestly speaking, we have CEPA with UAE. We have also with UK. We sign. Of course, it will be in effect next year. But FTA is already in place on 1st of October, 2 days ago. In fact, I'm in Singapore as of now with Mr. Piyush Goyal on a Singapore visit to invite investments from Singapore companies and also both ways. So overall regulatory regime has been changing. The government has been mindful. They are helping the Indian corporates to sort of from the perspective of ease of doing business in India. But let me give you a few more examples on what reforms have been done just to bring more light in the current context. As we know, there are trade barriers, but to help the Indian corporates, the government of India has recently constituted a committee under the Niti Aayog, Mr. Gauba, where they are completely making a complete reform of the Indian licensing regime or registration regime. There is a initiative on deregulation. There's an initiative on complete revamping the entire manufacturing licensing regime. There is an initiative on additional decriminalization process. There is a Jan Viswas 1 and Jan Viswas 2, but there are further initiative to entirely liberalize the entire registration and compliance regime. And I'm part of such committee working with the government. I can tell you that attitude is completely different. The government officials are sort of debating with the business people that tell us the options, tell us the ways how we can reduce the burden. We are talking about the SOP and deregulating the licensing regime. Only the critical sectors, sensitive sectors having large public interest will be subject to a regulation. And you will see in the times to come, probably 2 months, 3 months, or maybe 6 months time at max, a lot of deregulation happening. At the same time, in the context of the opportunity, the several companies across the globe, they are also finding the Indian market very attractive. And you see investment from Japan, Korea, UAE coming in a heavy way across all sectors, being manufacturing, logistics, real estate, construction sector, renewable energy. So all sectors are, firing up, and we have a good FDI as well as ODI happening with the help of all these schemes, which is PLI, logistics, Digital India. So entire ecosystem is working in that manner. Over to you, Nilaj.
Thanks a lot for this one, and I agree that multiple regulation, multiple deregulation changes, ease of doing business, India is focusing a lot, and that is building up the investor confidence so that we can try and see within India and outside India how it can help the trade itself. Thank you for this point, Rudra.
Nilachal,
Yeah.
I know I couldn't unmute myself, so I couldn't answer your question. So whenever you want to bring me in, up to you, Nilachal.
Absolutely, Gurnani ji, please go ahead. And if you want me to repeat the question, please let me know. Were you able to hear the question?
Uh, I did hear the question, but if I am not able to align myself, I mean, then you can probably interrupt me. So I'll tell you from my perspective, Nilachal, the best way to understand, uh, what's going on around us was I had gone last week to visit Tamasak. As you know, it's a federal, it's a, the sovereign fund of Singapore. And the billboard that welcomed me said, sense, adopt, and thrive. And went on to explain that we have to sense that the world around us is changing, that the earlier norms of globalization and free trade are now being undermined. And this is on Temasek billboard. I'm not reading anything or I'm not saying anything which I'm imagining here. The point was that climate crisis continues, but the rules of the trade have changed. And it is our ability to adopt will be critical for becoming resilient and creating a better trade. Now, the third part was to thrive amidst uncertainty. We have to realize that we have to stay focused. Now, that's one fact of life. Second fact of life is that if your DNA is not digital, it doesn't matter whether you are a mine in Australia or whether you are a consumer in Saudi Arabia. If your DNA is not digital, you cannot be agile, you cannot, uh, respond to the way economies or businesses are being run currently. And I do strongly believe that technology here is the glue. Technology is an enabler. And to me, it is not only a simple automation of, refurbishing your stores. It is about relooking at a supply chain, about from where the goods are raw material is obtained. Let us assume that you are a carton manufacturing company. I mean, you would have to look at the forest from where you get the wood. You would have to look at the transportation cost of that pulp. You will have to relook at the cost of the way goods are shipped. And I do believe again that if we do not embrace technology, if we do not embrace automation, we are leaving a lot of EBITDA on the table, and economies are all ultimately run not only on trade but also on the P&L. So I can give hundreds of examples of how technology is being embraced to respond to the current world. Like, for example, one of the companies I work with, they are relocating their manufacturing units. They're looking at value engineering. Why would they buy a ball bearing from the original equipment supplier? Why can't they buy it a substitute? So there is a technology being used to make alternative sourcing decisions, technology being used to optimize your input costs, which includes taxation. And number three is more important, particularly with the clarion call in India of Atmanirbhar Bharat about substitution, because we can't always import A versus A. Now we will have to figure out whether a B can do the job of A or not. And if yes, why not? So I am Nilachal, I can go on and on. It's my favorite subject, but I do realize you have a very powerful panel here.
Thank you, Gunani ji, because I think some of these points you made, the underlying important thing is technology. If we don't embrace technology in everything, in every service, it's going to be important. Wait, taxation or wait, import substitution, everywhere digital technology will play a critical role here. I will also move on to the next panelist, which we have, if Mr. Olu Oruke. So I just wanted to have this question to understand from your side, how do companies strategically align, innovate investment and a social impact to build this sustainable global business models, and especially in the energy sector? You've been working a lot in the energy sector, right?
Just unmuting myself. Thanks. That's a very great question, and thanks for having me today. I think, firstly, you have to understand that within the energy sector, there's a lot of opportunity for sustainability and resilience, right? And it is part of the work we do, essentially. Especially if you're working in the global south, places like India, Nigeria, and sub-Saharan Africa, where reliable power, reliable energy to serve people is a luxury. So the opportunities abound, especially being able to integrate sustainability into core of any business. Firstly, you have to, and for most companies, it really should start with a 360-degree view of whatever the operational relationships with the people, the planet, and of course, the profitability as well. The three Ps, if I may call them that. And then if you look at a holistic view of that or a 360-degree view of that, and then this can become more meaningful as a conversation when you look at the risks and the inefficiencies that could be associated with the kind of businesses or business that we do, or in the kind of places that we operate, and the business realities in those kind of places. The instabilities, we already spoken about the trade wars or the tariff wars. We've also spoken about, the current unrests across various parts of the world and how they could affect supply chain. So for us, those kind of things are reality. But in terms of how to build our sustainability, it is critical to always have that 360-degree view, and then being able to bring it home. Also, there is the need for, and I've also heard automation. Data is a very, very big thing. There's nothing, access to more data, access to the right data, that reflects whatever the sustainability risk and even opportunities that could affect any business, especially for us in the energy sector. It is also very important to continue to look at data. Market data is critical. For instance, today Nigeria is the largest off-grid market in the world. It used to be India. DRC is the second largest. And looking at that data around also the economic metrics of being in a place or operating in places like Nigeria versus operating in much smaller countries like Sierra Leone, just to the west of Nigeria, also in West Africa, and being able to take those decisions are also very key. It is also very critical that companies understand how environment, sustainability, and governance issues become very relevant to business continuity, and how to help evaluate whatever enterprise risk, how to also ensure that decisions that integrate sustainability flow into the company's DNA essentially. I've mentioned data, and of course the right metrics, also also ensuring that it's very critical to also know the right metrics. There are various reporting standards across the world, but integrating sustainability measurements or sustainability metrics makes businesses become more aware of how to track these things and stay on course despite whatever may be going on in and around them, right? And you could see this with a lot of companies that have been in certain markets for hundreds of years or even decades, and how they've stood out by being able to integrate this innovation, being able to integrate the right investment, and also ensure that their models remain sustainable despite what is going on. I'll stop here for now, and we can continue to speak more about this. Thank you.
Absolutely. Thank you. I think, yeah, some of the points on the sustainability being important and the sustainability matrix we need to definitely discuss as we go ahead more and see what are the specific matrix we should have as companies. And since climate agenda is going to be one of the key things, so how do we integrate into it? So at this point, I also wanted to bring in Parmit Pal Chaudhary ji from Eurasia Group. I'm sorry, sir, we were not able to introduce you earlier, but welcome to the panel. And I just thought I had a question on from BRICS to Quad. We're witnessing, a major shift in the geopolitical realignments. Are this shift influencing the business strategy and investment decisions for the Indian and global companies?
So I think, as other speakers have mentioned, in a period of reasonable global instability, where we're not certain about a lot of the existing international frameworks, notably, for example, the World Trade Organization, which is now starting to look like a zombie organization. Its tribunal system has been paralyzed for over a decade. And its MFN status, most favored nation status, in which you would essentially, whatever you agreed to in one country on trade would automatically apply in most cases to other countries, notably tariffs, no longer is a standard that is required. It's an option, if you wish, for countries, with the United States taking the lead in not applying MFN in its new agreements. You have a breakdown of a lot of international structures. The other side of that, however, as others have mentioned, is a rise of a whole set of new digital technologies in which data flow across borders is almost now as important as the flow of goods, and is an essential part of the movement of services across borders. But you need standards for cross-border data flow, data localization, data privacy, and so on. So you have a whole set of these, both old systems breaking down, in which case new structures or standards or coalitions of standards have to be formed. And then you also have new technologies coming up, which we don't basically have a global structure in existence. And then on top of that, you have a breakdown of the international security system, where America, the great global policeman, is effectively saying we're no longer prepared to play that role anymore, except in a very few areas of the world, which we see as crucial to our interests. President Trump is perhaps an extreme version of this, but nonetheless, that's basically going to be a pattern, I think, over the next coming decades. In all of this, countries hedge. They say, okay, what exactly am I supposed to be doing in these circumstances? And because they don't know for certain which direction a lot of these trends eventually end up with, nobody would have expected, I think nobody really predicted the extreme with which the Trump administration in its second avatar would go in dismantling or undermining existing treaty structures, alliances that America has. Well, the WTO has been now bipartisan since both the Biden and Trump administrations undermine it. Countries are hedging. So you basically have a number of things coming up. One on the technology front is things like the Quad. The Quad is fundamentally a strategic technology understanding underneath it. It's about a set of countries nervous about the rise of China's capabilities in technology and strategic technologies, and working to coordinate action against Chinese dominance, or at least reducing dependence on China in crucial future technologies, notably things like quantum computing, AI, but also green energy and semiconductors, for example. It's more of a coordination body, but nonetheless indicates a new kind of international organization built around strategic technology. And we also then have, as you mentioned, the BRICS. BRICS originally was not taken very seriously by any of its members, including its founding country, Russia. But over time, it has emerged, especially as the US-China rivalry has grown. The Chinese, in particular, started to see this as a sort of anti-Western G20, or originally a G7, now increasingly maybe a G20, in which China plays a dominant role. India and Brazil, among the founding members, are opposed to this. They have particularly taken objection, saying that we wish the BRICS to remain non-aligned. We agree that something like an emerging economy / global south body is probably a good idea, but we don't want to make this part of any global battle with the rest of the world, with the US and China. So you're seeing, therefore, a battle between India, Brazil on one side, Russia and China for the heart of the BRICS, and that continues to this day. But there are a lot of trilateral and bilateral agreements that are coming up, which are almost as important, if not more important. The Japanese, and when Prime Minister Modi went to Tokyo recently, before he went to the SCO summit in Tianjin, he met then Prime Minister Ishiba, and basically they signed an economic security initiative. And when you talk to Japanese officials, what's interesting about that, something new, it doesn't sound overly exciting, but the Japanese are very understated. But when you talk to them, they're very clear. We now see China was a source of instability in the international system. Unfortunately, we now increasingly are starting to see America playing the same role. We need trusted partnerships for a lot of crucial supply chains, semiconductors, permanent magnets, very important. Every single military drone in the world uses a permanent magnet. And we need to develop relationships that have to be even independent of the United States. Which is an amazing development for the Japanese, and therefore the economic security initiative. So you see this, Japan hedging against America is, in my view, a remarkable development. This is a country who has seen its security completely tied to the United States. I was recently in Taiwan. I came back from it just yesterday, and I was struck by the same language, somewhat more muted, coming out of the Taiwanese. So you started to see a lot of this. So governments are trying to get a seat into as many of these organizations as they can, and trying to see whether or not they would be something bigger in the future, but can also be the basis of standards and agreements that can guarantee investments, capital flows, trade, and data flow over a period of time that would, for example, reassure the business community. With the Persian Gulf countries, we've tried the ITU to IMEC. Unfortunately, the conflict in Gaza has frozen both of them. But we've seen the United Arab Emirates definitely come to India and say, look, the Levant to Europe segment of ITU2 is not working out right now. We'll see what happens. But the one between us and you, between India and the Gulf, can continue. And we are prepared to put money down on this. And so you can still see UAE investing heavily in infrastructure. And we have an FTA with them that continues to be a bridge between the two countries. Because Philip, the High Commissioner, is here from Australia, I'll also mention that we're now with the movement on critical minerals, in which India is putting equity investments. in mineral resources in Australia with some sort of a guarantee on the supply is another element of exactly what we're going to be seeing. I just had a meeting a few weeks ago with a senior leadership team from the Australian company, which is a major player in lithium battery production and processing. And again, scouting for those, but looking for a country which they feel is geopolitically safe for them to invest in and work with. So you're starting to see all of this. Part of it, as I said, is highly fragmented. It's bilateral and trilateral in some cases. The Quad, the BRICS, ITU2, IMEC are a bunch of other similar things. But again, the FTAs that others have mentioned are effectively, in many ways, now becoming a WTO plan B. If my WTO is not working out, what is my plan B on the international trading structure? Well, it's to guarantee market access and give a structure by which trade and investment can flow. And you look at what India is doing in its FTAs, whether it's with the EU, UK, EFTA, Australia, and so on, a lot more emphasis on investment protection, a lot more emphasis on labor mobility, a lot more emphasis on technology. It's no longer just about the old tariff game. It's about an entire economic package designed to provide stability in an incredibly unstable international environment.
Thank you. Yeah, absolutely. Very good points. And I think some of these things really matters as we're going ahead in the current turbulent times. The standards, how do we define them? How do we get these bilateral agreements? And it's important for us to take it forward. Now, I would like to come back to His Excellency for another question on given the entire Indo-Pacific centrality to global growth, how can government and businesses collaborate to build the economic resilience and ensure that there is a sustained market access?
Well, thanks, Nigel. I'll come to that question, but I hope you don't mind if I first of all address one thing that my esteemed colleague Pramit said. I warrant very much of what he said, but I just want to make sure we're not too quick in sounding the death knell for the WTO. Now, I know this is an organization under pressure, but it's also an organization that has got a lot of support, and including from my government. We are still profound believers in free and open trade. Let's not forget, yes, the WTO is under pressure. Yes, the MFN principle is being departed from occasionally, and more than we would want. Let's be clear about that. But the vast majority of global trade is still occurring according to WTO rules. The vast majority. And every day, billions, perhaps trillions of trades are undertaken according to WTO rules. Now, Pramit's quite right in saying that the appellate body for the WTO is broken at the moment. That's true. That's why my government has moved in to work with others to find an alternative to the appellate mechanism, which has already tried a few cases and has others on the way. So I totally agree with Pramit that WTO is under pressure, and we all need to be very focused on that. But I don't think we should express its death too soon. And certainly there's some of us who are working very hard to keep it alive. Look, in answer to your question, a couple of things that are important. Firstly, what are we doing to make sure that in this more complicated world we can do the best in our bilateral with India? So number one, my government is expending about $250 million over the next few years, deliberately designed to increase trade and investment between Australia and India. And that includes support for business delegations, support for new trade commissioners, and indeed a whole new consul general in the case of our consul general freshly opened in Bangalore. And it also includes the work we're doing on FTAs. So, we are doubling down on this on this India-Australia corridor because we think it has great opportunity. Second thing is, and a number of people have mentioned critical minerals. I just want to go into that for a moment. There are some specific supply chains which at this moment, when we are dealing with some aspects of global trade that are not fluid and supply chains which are too rigid and based on one or two markets, we're deliberately trying to diversify. So our ambition is to create a straight line supply chain in critical minerals and especially lithium between Australia and India. Now, this really has got to happen. India is one of the growing producers globally of batteries and electric vehicles. Australia produces more than half of the world's lithium, but there is precious little direct trade. As Pramit said, we're on the way to creating some specific opportunities for Indian firms to be able to have offtake for Australian lithium. We're very keen on that. But frankly, as soon as we've got that sorted, we need to work on the processing side, which is very complicated. And to be perfectly honest, there are others in the world who have got most of the technology that relates to the processing. And Australia and India, together with its Quad partners, are going to have to work harder to make sure that we can make that straight line supply chain work. But it's not just critical minerals. We are looking for diversification from a range of fields where we can see India as a way of overcoming supply chains that are locked up at the moment. So we want India to be a much bigger producer of PV capability. We want India to be a bigger producer of semiconductors. And in each of these supply chains, Australia has a role in the supply of tech, but also in the supply of raw materials. And we're working quite hard to make those supply chains work. I mean, the third thing, obviously, we've mentioned it before, is the bilateral free trade agenda. And we're continuing to pursue that with SICA. But, in answer to your question, three things we're doing. Firstly, a large amount of government effort to support business development between our two countries. Number two, specific focus on some supply chains which are crucially important. And number three, sticking with the free trade agenda.
Yeah, absolutely. Thanks a
If I
lot.
if I can add to what His Excellency has just spoke about, if you just couple of minutes, completely echoing what His Excellency said, and just to add to what he said, what is the missing block in this context of the ecosystem is the SME. SME in the context of, say, Japan or Korea. Like most of the big companies from these countries are already here. But the missing block is the SME and the government, the policies, there are, several policy initiatives, including, keeping the PLI for the time being outside this initiative, which is definitely a plus plus. But industrial parks is going to be a game changer. There have been private companies who have been, operating as industrial parks. Those are very great help for India to attract those SMEs. Most of these SMEs who are either from US or from European country or from Korea or from Japan operating in China, their profitability has gone down drastically, largely into automotive, but also in semicon, etc. Now, in the context of SEO meeting, one of the alignment that was required, that some of the Apple suppliers, in the context of semiconductor I'm talking, most of these companies have some engagement from China, and we have this press note 3 requirement approval. Now, one of the reasons for these meetings, and the government is considering to liberalize the PN3 requirement, is to attract the SME and largely to semicon and the technology segment where India need those help to grow those pie for India share in those market.
Yeah. Absolutely. Thank you for adding those points. I think MSME, industrial parks, and these are critical for actually doing it. And His Excellency, for your thoughts on how this entire partnership is growing across those three elements is really critical as we are going ahead within India and Australia. Okay, so if I go to the next panelist, Mr. Ashish, if I can just take your views. As the supply chains are being redrawn and the Indian corporates are actually positioning themselves, the new regional trade architectures as what opportunities you think are emerging for the companies there?
Yeah, so I'll just take a couple of minutes on a point which I want to talk about before taking this particular aspect, Neelachal. First of all, we look at India as probably one of the brightest regions to look at for the simple reason there's the demography, we have the highest population in the world, stable political ecosystem currently, and at the same time, the growth in the economy is a good 7%, give or take, depending on what lens you look at it. So I think to your point, one of the things we're looking at is to look at domestic consumption while looking at exports. And we do have an advantage because we make in India, we manufacture out here. So for us, it becomes a sort of decision on domestic versus exports. Pramit mentioned about countries hedge. I would also say companies also hedge, depending on the ecosystem around them. So those are the two things we keep looking at. And we talk about economic diplomacy. I think they are not separate. I think economy and diplomacy do not converge. We feel here that diplomacy has become economy. If you go in the past, and a lot of my co-panelists would agree with me, there used to be a joint statement talking about, security, defense, trade, people to people, and so on. These days, we are observing a shift that everything is based on the economy, whether it's tariffs, whether it's taxes, whether it's opportunities, it's all economy. So keeping these things in mind, what we look at is to see how we can best hedge and find the optimal solution which a company like ours can utilize.
Yeah, absolutely. Absolutely. Thank you, Ashish. Okay, so if I can come back to you, Mr. Gurnani ji, for as a supply chain, you talked about digitization a lot, that this is one of the critical things which needs to be done. So what are the strategic implications for this cross-border trade and this entire enterprise resilience in the multipolar economy when in the context of the digitization?
So we all agreed that digitization is equal to a modern company and a modern economy. We all agreed is that there will be changes in either because of political disruptions or because of trade barriers or because of tariffs. I mean, there will be some changes that will happen. We also agreed is that companies by itself know how to be resilient and be able to fight. Now, there are two ways to fight it. Number one is because technology is equal to data and data is equal to decision making, so I can do better decision making. The second way of looking at it is that what are my leverages? Now, I strongly believe that the way the globe is structured, uh, it's impossible. I think many of us are overreacting to the current environment. Uh, 10 years ago, China was even denied an Android operating system. And China's response was they developed their own operating system and they were able to produce. When I went to Middle East, I was able to see that they are able to Huawei trifold phone sells better than an iPhone in some markets, or better than a fold phone of Samsung. So my point is two. One is the resilience, and number two is if you push somebody in a corner, technology gives you a way to improve and leapfrog. So my current opinion, Lilachal, is one is this dust will settle down. It is just a matter of time. And number two is for countries like India to become a lot more self-reliant. Self-reliant in defense technologies, self-reliant in you know uh, air the aircrafts, self-reliance in MROs, self-reliance in to try and become self-reliant in energy. I mean, the reality is that India is now 20% ethanol, whereas Brazil is 100% ethanol. I mean, that effectively means is some of our mobility issues where we are dependent on fossil fuels, we can address them. Number two, I mean, coal. Most of the world shuns coal, but I can use coal to produce hydrogen and I can use coal to produce urea. Urea is one of the biggest inputs. So, point is that this can be a good wake up call, or this could be an overreaction. But India's economy is resilient, and India will be able to withstand some of the shocks that it may cause. And number three is technology will continue to evolve. And yes, in 76, when the George Fernandez banned technology, banned Coke, banned IBM, I mean, remember, India innovated even during that period. Our mainframes, we didn't have mainframes. We developed Unix operating system to work on parallel processing. So I think, Nilachal, this is an opportunity for us.
Absolutely, absolutely. But this is definitely an opportunity for us, and we will need to look at opportunities whenever there is a crisis there. Uh, but yeah, if I move next, I think we've heard, Rudra, from you for multiple thoughts on how the Indian government is doing, the MSME is doing, industrial parks, how the government has been focusing, and this is a favorable, the government is creating a favorable environment to grow. Uh, what is your thought on the international joint ventures M&A often face a compliance and regulatory hassles? I hear that a lot of ease of doing business has been done, and but is there anything that the companies can actually learn from all these cross-border deal structures which are there?
See, before I get into the regulatory part again, let me give you a business sense again that as I already spoke about that India is going global, and I'll give you two comparative which are very important here. One, that if you look at the P multiple in the context of India versus other part of the world, India is the second highest P multiple. That means it's a good situation for us. But in other cases, like if you look at comparative study with Japan, or if you look at European country, the PA multiple in India, it will be somewhere between 22 to 28 times, whereas Japan will be 10 to 14 times, and you will be probably 14 to 18 times at max. So this is the right time for the Indian company, and that they are taking the benefit to going global and acquiring the assets. In the context of global acquisition, and the recent trend that many companies are going, even the mid-segment companies are going global and acquiring assets. The challenges that they're facing largely two or three accounts. One is if the Indian company is acquiring these listed assets, then you have this shareholders activism, which is very active, challenging the overall valuation and the acquisition per se, which sometimes is a problem for Indian companies to navigate. Second problem in the context of the Indian company, if they are going to say Korea or to Japan or to say other Asian country, language and the culture becomes a problem again. The third is overall regime in those country, like for that matter, if Japan is a civil law country, so that is Korea, their regulatory regime is far more liberal. I mean, while we have achieved a lot, and probably the way we are progressing, we will achieve a lot again. But it's quite easy to do, sort of acquiring company and doing businesses there. But particularly in the context of EU, the employment law, the data privacy, and the environmental law are very, very crucial. And most of the challenges that when we acquiring companies for these and assisting the Indian corporate, we issues come around those aspects, environmental or the employment or data privacy, data localization, and some cases also scrutiny depending which sector are you into, sensitive sector, non-sensitive sector. Sometimes the regulatory review and the approval process takes time, including the antitrust approval also that also come on the way. But those are honestly speaking not the big task. The big task will be the employment related or the data privacy and also the environmental, and that takes time. Sometimes we have seen deal falling because of those critical issues, because liabilities are in some cases very heavy. And given that Indian companies they are still growing, and the compliance costs are quite high. Sometimes they try and make a distance to get into such assets. But I think with the standards growing up for these companies, they are pushing themselves and acquiring these assets.
Okay, thank you. If I can go next to Mr. Alu Aruke, on just a question on looking at Africa. If I can ask, and other markets where we see a lot of opportunity there, what do you think the challenges lie for Indian companies if they want to expand internationally?
I think, firstly, before we look at the challenges, let's also look at the opportunities, right? According to the IMF, and between year 2000 to year 2010, six of the world's fastest economies, growing economies, were in sub-Saharan Africa. Today, in 2025, it is almost similar number, with South Sudan growing at almost 30%, forecasted to grow by almost 30%. You also see countries like Uganda, Niger, Senegal as well, growing at single-digit rates and amongst the top 10 fastest growing economies in the world. So the opportunities are there. But of course, the challenges then, are there as well. The markets are a bit dynamic. While we see some impressive GDP growth rates, you also have to look at logistics and things around that, right? One of the things that continues to inhibit Africa is movement around the continent. For instance, it costs a lot more to go from a country, say Nigeria, to Europe than to travel from Nigeria to Ethiopia, which is just in the same continent. So that is one, and the fact that Africa or Sub-Saharan Africa does not function as a single market. There are multiple currency needs across every country. And that diversity makes it very, very difficult to say, you bucket Africa in one piece. You have to look at each market in a different way and different light. We're not talking about the multi-tribe or multi-religion kind of outlook that African countries have, which make it very, very difficult to kind of predict people behavior sometimes, right? And of course, you have to look at what right channels, the challenges. And while Africa is a growing young demography, one would think that the uptake of things around e-commerce would have moved very quickly. But you've seen companies like Jumia being beat back and scaling down on their model for e-commerce because that assumption that e-commerce should have taken off was wrong. While the population continues to be a very great driving factor for anybody looking at any country in sub-Saharan Africa for doing business, purchasing power continues to be low. That is something that you need to, any business in terms of coming from outside the continent needs to look at. What is my target market? How is the purchasing power? What are the economic drivers? And of course, we cannot speak without mentioning the fact that political instability still is very, very, very evident in most parts of the continent, right? While some countries have had governments that have been, in place for over 3 decades, there are some that political instability continues to be the order of the day, and you never know what policy change can happen and stuff like that. But it is not all doom and gloom. The population and the young population presents a huge opportunity in terms of anybody trying to access labor market needs. It also presents a huge opportunity for adoption of tech. even though that remains not to be widespread. And even though there are logistics challenges, I can tell you that companies like Coca-Cola have penetrated even to the last mile. And how they've done it is very, very intriguing and something that a lot of companies need to kind of study. I'll stop here and I'll speak more as we go. Thank you.
Absolutely. So if I can go next, Parmiji, if I can ask you this question on how do you think the geopolitical signals, what do the business leaders should be doing right now? How they should be, uh, adapting to the situation?
So I think for most countries, definitely the case with India, the primary goal right now is to stabilize your economic relationship with the United States. By far the world's largest market, it is absolutely essential for India's own economic growth. It is our largest source of FDI, FPI, remittances, and it actually overtaken China till recently as our biggest trading partner. And that focus continues, and I think we've already seen Commerce Minister Goyal and Anant Nageshwaran, the Chief Economic Advisor, saying that they expect a deal to be done in November. My company's own understanding in Washington is that the basic trade deal is largely done. It is now basically trying to work out a political solution to Russian oil purchase issue that remains. I think once that is done, we will then be following that up with the FTAs with the EU and so on. And so you will have, and if we finally get one, we'll be starting a new FTA with Canada, the negotiations probably early next year, complete the second half of the Australian one, do one of the Gulf Cooperation Council, and of course the ones with Latin America. So you then secure the bulk of your main markets in the world. We will never sign an FTA with China, so therefore that's not really in play. At that point, we then ask ourselves whether we can go plurilateral, for example, the CPTPP, which covers the bulk of the Indo-Pacific minus China and the United States. In my view, that's an obvious next goal to go through. And so you then will have a cluster of trade agreements, which will serve to promote your own exports, provide a market. And in many of them, and I think this is crucial for India, will give us very low tariffs on low-end manufactured goods, notably textiles, apparels, and footwear, something we've not had in the previous FTA understandings we've had, because LDCs, least developing countries, have traditionally received special lower tariffs, but that is being abandoned, if you wish, in the new international trading system. This is very important for us because this generates the big low-end millions of low-end semi-skilled jobs that we lack right now. Our manufacturing, Apple and electronics is all doing very well, but these are not the kind of jobs that have really millions of people involved at the lower end, and can never quite reach that scale. This is very important for us. I think that's one. Second, can we secure supply chains for crucial elements? While it's very good to talk about Make in India and Atmanirbhar, the fact is within the government it's fully recognized that no country in the world is an island unto itself. Everybody depends, at least to some degree. You can reduce dependencies, you can diversify supplies, which is, I think, crucial. But for example, our energy demand is escalating at such a rapid pace, there's almost nothing we can do to stop us from importing more and more. And in fact, as a percentage of our overall fuel, we are both a natural gas, uranium, oil, and even coal. Our imports are rising at a very dramatic level. So we need to secure supplies for that. And I think we're starting that process. I mentioned the Australian deal, which will incorporate some energy as well. Our special relationships now with the UAE and Saudi Arabia. Saudi Arabia is committed publicly to ensuring India's energy security in the future. But we also have things like the Rovuma gas field in Mozambique. Olu mentioned Africa's importance. The Rovuma 2 gas field, which is 50% owned by India, would be enough to provide all our natural gas needs for the next 25 years. We just need to build an LNG terminal, which we're doing with the French and the Japanese in Cabo Delgado in Mozambique. But we have all various other such agreements slowly being put together, and we will need to build more of them. The game is to get the geopolitical sense to work out who we can work with, who will be with us on these type of things, and who can be trusted to work with us over 10, 20 years. And that's why you're seeing an enormous amount of diplomacy that's taking place to make sure that who can we work with. And this includes things like semiconductors as well. We have been wooing the Taiwanese, who are the world's semiconductor manufacturing kings, for the past 7, 10 years. And it's now starting to work. The number of Taiwanese companies in India has gone from virtually nothing to over 200 today in just about the last 15 years. And we'll see continuing stories on that front. But as our economy expands and more sectors, these agreements, this diplomatic game is going to expand more and more, and it'll become more difficult as countries fight with each other. But sometimes I think by carefully playing our cards carefully, and even with China, a country that we generally have problems with, we've done a reasonably good job. I'll give you a simple example. When Israel and Iran went to war recently, there were about several hundred Indian students trapped in Iran as the airspace had obviously been closed down. India approached Iran and Israel and said, we'd like to can we get an air corridor to evacuate our students? Both countries agreed, and even the Israeli Air Force, in effect, stopped attacking Iran in those areas, and Iran air defense systems shut down, and we evacuated our students with ease. When other countries, like Australia, for example, asked for the same thing, they were refused. Israel and Iran said, we don't care about what you say. India gets a special privilege because it's a country we think is important enough for our futures.
Thank you. And I think lots of points have come out. No, unfortunately, we are out of time. I will just try and see if I can wrap it up. This topic is actually a very exciting topic. We can actually go on, and multiple views are coming up. We are in a situation where the geopolitics is currently affecting all companies. And as someone said that you need to look at the economy, the business have to look at it in a political manner. So, okay, so some of the key takeaways and multiple points have come out, but it's like we're looking at the bilateral agreements coming up, picking up in a big way, regional bilateral or tripartite agreements coming in between countries. That's what we need to look out for. Second is obviously His Excellency has talked about how India and Australia have actually having this bilateral agreements and improving how some of the critical minerals can have a straight line in terms of the export and import can be easily streamlined there. Digital, all of us, I think, have been talking about the digital is becoming a key thing in how digital. Everyone bring in digital into their entire supply chain, and which will help in their global competitiveness as we go ahead. We talked about standards, and I think it's important for us to build up the standards as we are going into the competitive world globally. We need to build up those standards as we're doing. We also spoke how Indian government is making multiple changes in multiple laws, and it's bringing in MSMEs, industrial parks, ease of doing business, the deregulation part. Multiple things are being done there in order to do it. And we also heard how within certain crisis which has happened, how Indian government has been balancing its act throughout the way. So moreover, we will have to look at what are the opportunities during this geopolitical situation right now. How do we create a risk management thing, take decisions keeping everything into mind, and how the geopolitical situation is changing, rather than not taking a decision based on one source of origin of the product, but the entire supply chain there. That's all we need to look into it. Moreover, it's an interesting time, and I would like to thank everyone and for joining in today. Amazing discussion, great points, and looking forward to meeting all of you sometime in person. Right, great. Thank you.